my absolute pleasure to welcome Sudhir Sitapati, the MD of Godrej Consumer Products. Sudhir, thanks very much for your time.
Thanks, Krishna.
I've spent a bit of time reading up on the annual report for FY24, and what came out, at least a couple of things did come out, but I liked the bit on the mention of premium innovations. For the benefit of the viewers, would you simplify that for us and tell us what it's all about?
You know, premium innovations in our context actually means innovations that are premium but for a mass audience. And what I mean by that is the best example of premium innovation of last year was a product called Aero. So if you have a car and you drive around Bombay, you'll see 4 or 5 out of 10 cars will have this kind of oval fragrancer called Aero. Now that's a 99 rupee product. So is it premium versus doing nothing in the car? It's a premium innovation. Is it 500 rupees? It's not. So even when we think of premium innovations, we're constantly thinking of premium innovations for kind of upper middle class consumers.
And you've been spending a lot of time because we had four big ticket launches last time. Speaking of Agarbatti being one of them, there's Fab liquid detergent. What is it that keeps innovation funnel going for a company like yours?
I think Godrej has historically an excellent culture of belief in innovation. See, innovations needs a culture of belief in it. Right. So our R&D system is a very strong system, and in many companies, marketing kind of briefs for innovation. Here, often R&D comes up with their own products, and then marketing kind of markets it. So Fab is a good example of that. You know, Fab is a product that has been in the laboratory for a long time, being here, there. Suddenly there was an opportunity, it came. It was an exciting mix, and it's done extremely well for us. And so was this Aero, which is, incense stick is also a great innovation because the molecule that's gone into incense sticks has been more than a decade in the working. So what looks like a fast innovation often has many, many years of work behind it.
So it appears to be a mighty interesting time for FMCG business. I mean, people have been speaking of costs, and at some level it's reflected in the kind of numbers one is seeing from the FMCG companies for this quarter and FY25. What is your view? I'm not speaking of just the way forward, but the whole process in terms of getting the equation right between what is inevitably rising costs and the need to increase volume and still manage profitability. How much of a challenge is that for your company as we speak?
No, I think the priority for our company is volume growth. If there is a sharp inflation in costs in the short run, we don't panic and let's say cut advertising. For example, you can very easily cut advertising in order to fund a cost. We don't do that. So, you know, we're happy to take a hit in profits in order to fund volume growth, but our priority is volume. A lot of costs are cyclical. They come and go. It's important not to react to it.
What are you making of the next couple of quarters now? Because you spoke of palm oil being a bit of a, if I may say, it's a bit of a shock the way it played out and affected the margins. But you see that?
Yeah, it will, because palm oil prices are lower now.
That's right.
And it will reduce as we thought it would, which is why we didn't overreact to it.
Do you want to speak to us a little bit on overseas business, so in terms of how that's playing out?
Yeah, no, I think our overseas business has been doing well. Indonesia has stabilized and is growing volumes at kind of mid to high single digits over the last 2 years, which is, we're quite happy with it. Our Africa business had a tough year in terms of top line last year, but excellent year in terms of bottom line. And our strategy in Africa was to get the margin structure right before moving to growing, and I think this year we'll start growing again. And a lot of innovations from India, we are now finding it easy to export into the global markets.
Do you want to give us a couple of examples on that?
Well, there's this product called Air Pocket, which we invented in India, which you hang in the bathroom. That's now gone to 80 countries, and every country it goes to, it's a blockbuster hit. So I saw a photo yesterday from Congo, where we launched it in Congo. This is, of course, we've launched it in Argentina, we've launched it in South Africa, Nigeria. It's quite big in Indonesia, it's quite big in Bangladesh. So this business has done extremely well for us.
So if we're speaking of this being the innovation hub and India therefore becoming the export hub for you, where products actually move to other parts of the world?
I think so. I think if you look at the history of most great FMCG companies, they do have a single country as the origin country. And they then export their blockbuster products. Once those products hit critical mass in a country, they set up an operation. That is how most FMCG companies have operated in the world. We are at an early stage of development, but I think we will go that way.
You had a big ticket acquisition in terms of Raymond's consumer care business 2 years ago. There's a bit of talk last year in terms of rationalizing SKUs, but finally it appears as if the EBITDA margins are now on track. What is your broad outlook in terms of the market, where it is and how this particular portfolio is?
India is a market which has a lot of potential both in deodorants and in fragrances. Fragrances is exploding. Deodorants, which grew quite fast for a few years, has stabilized now. And our job is to get deodorants to grow again. So we are looking at category development in deodorants. We're looking at participating in fragrance. We're looking at premiumizing in sexual wellness. So we're very happy that we did the acquisition. It gives us another vector of growth.
Do you want to tell us a little bit about pet care, the new baby, if I may say so?
Yeah, pet care is one of those categories, Krishna, which is again a long runway of growth. China pet care is $20 billion. India pet care maybe $700 million, maybe pet foods. So that's the kind of runway for growth. Pet numbers, 10% of Indians have pets. They feed 4% of the calories that those pets eat is pet packaged foods. So massive runway of growth. We've got a kind of partnership with Godrej Agrovet, which is makes a lot of animal feeds businesses to manufacture pet food. So I think we have a good right to win and a long runway of growth here.
Thank you very much, Sudhir, for your time.
Thanks so much, Krishna.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.